When you started investing, you set up a 70% equity and 30% debt allocation, which is sensible and balanced. Then the markets went up by 40% over next 2 years. As a result, your equity investments grew significantly, but your debt investments stayed steady. Today, without you even touching anything, your portfolio is approximately 85 to 88% invested into equity and 12 to 15% in debt. While you thought you were taking 70% risk, but in reality, you are actually taking 88% risk. And most people don't know that this is happening with them. Well, this is called portfolio drift. And it's the silent risk that most investors carry. The consequence is that when you are 88% into equity because of a recent bull run, your downside in the next correction is much larger than you planned for. A 30% market fall on an 88% equity portfolio cuts your total portfolio value by almost 26%. Whereas a same 30% fall on your intended 70% equity portfolio cuts it by 26%. And that 5% difference on a 50 lakhs portfolio is 2.5 lakh from a mistake that you didn't even know that you were making. The second problem is buying high, holding high. When equity runs up, your portfolio automatically overweights it at its most expensive point. When equity crashes, your portfolio underweights it at its cheapest point. Drift means you always own more when it's expensive and less when it's cheap, which is the opposite of what you want. So rebalance your portfolio once a year, not more, not less. Check your current allocation. If it's drifted more than 5% from your target, sell the overweight asset and buy the underweight one. It just takes 20 minutes and happens once a year. Even better approach is tax smart rebalancing. Instead of selling equity, which triggers capital gains, first direct new SIP money into the underweight category, which is usually debt, and sell equity if the new contribution can't close the gap. A portfolio that's never rebalanced doesn't stay at your intended risk level. It drifts toward whatever the market has been doing. And a portfolio that follows the market's recent trend is a portfolio that crashes hardest when the trend reverses. So open your portfolio tonight, check the equity to debt split. If it's drifted by more than 5 to 7%, that's your rebalancing signal. ये एक बार का काम है, साल में एक बार, इससे portfolio healthy रहता है. Also do like the video and share it with your family and friends.